Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and I am joined with me, as always, except for last week, which was a bit of an anomaly. But as always, joining me today is Charles Sizemore, co-editor of Green Zone Fortunes, and we have Investing with Charles, as we do each and every week. Sorry in advance. Sorry for making you go solo last week, Charles. I apologize for that.
The audacity of taking a day off.
I know. I took a day off, and that's nearly unheard of, and I forced you to do things by yourself.
We just assumed you died because you never take a day off.
That's true.
We just assumed you were terminally ill or something. So good to see you're not.
That is valid. Plus, I felt really bad about leaving you to your own devices, which I've learned is never a good thing. But
I didn't burn the house down, so yeah, that's
true.
Good.
That's true. Nothing caught on fire, so I guess it was okay. But we're back and we're ready for this week's installment of Investing with Charles. And Charles, I have something interesting for you, only because of how what I want to do. I guess let me back up. I want to compare two stocks, and I want to compare two stocks that are similar in so much as that they are similar in where they are based out of. And this leads to kind of why I want to compare the two. And of course, recently we've seen stocks, U.S. stocks that are based in China have been hit very hard. The Chinese government has gone almost out of its way to really push additional regulations. They've hit crypto.
There's no almost on that. Like China is very much an exercise in showing who wears the pants in China. Like this is the government there saying you operate because we allow you to operate, and that's the market, not surprisingly, did not react real well to that.
It's not something that's new. It's just this just happens to have come at the forefront at a time where the U.S. stock market itself has seen a lot of headwind or some variant headwinds. But so the Chinese government has gone after cryptocurrency. They've gone after big tech. They've gone after even
Fintech.
little tech. They've gone over, with the exception of mom and pop retail. They've hit everyone basically within the borders of China. And the two companies I want to talk about today are one is a holding company, but it's a very well-known holding company that does online advertising, does fintech, it does business services, it's got several segments. And the other one is kind of been billed as the Amazon of China. The first company is Tencent Holdings Limited. It trades over the counter in the U.S. and its ticker symbol is, if I correct me if I'm wrong, is TCEHY. TCEHY, and the other one.
I always struggle with that one. I always have a hard time remembering that one. I have to think about it when anyway.
It is one. It is a struggle to kind of remember just because it just doesn't seem to. It
doesn't flow.
No, not at all. The other one, however, does, and it is Alibaba Holding, which trades under the ticker symbol BABA. And of course, Tencent is a holding company that does. They do a lot of things: information technology, business services, fintech, online advertising, tons of things like that. Alibaba, of course, is a large online marketplace. They do more than that, but it's mainly known as being a very large marketplace. In fact, the largest online marketplace in China. So
it's essentially a hybrid of eBay and an Amazon.
Exactly.
It's an interesting. It's funny. People tend to think of the Chinese tech giants in terms of what American tech giants they're similar to, and there's really not a super good comparison for either one of these. They're distinctly Chinese, and they have distinctly, characteristics of their home market. And comparing them to a Western company is actually kind of not fair, to them. And it's funny, like they do everything. Like these two companies are the Chinese economy at this point.
They are extremely diverse. It's not just, companies here in the U.S. tend to put all their eggs in one, maybe two, three baskets. These companies are spread out over a wide range of sectors that they are involved with. So first, give me your take on both these companies, and then I want to we'll both decide kind of which one we would recommend as a stock investment. So go ahead and give me your thoughts on Tencent and on Alibaba.
So I like them both. Now you have to ask that question: am I catching a falling knife right now? Because both of them have been just pummeled all year, really, but particularly over the last several months. If you look at what makes them attractive, it's really kind of the same story on both. Both are still very, very, very high growth companies, despite being extraordinarily large. Alibaba's market cap is approximately 400 billion or so, give or take a few tens of billions. You know, what's a few tens of billions among friends? It's roughly a $400 billion company, and Tencent, I want to say, is touching on almost 600 billion. So these are, you know, if there were two companies outside of the U.S. that really had that potential to hit that $1 trillion market cap mark and go into that elite company with the Apples and Microsofts of the world, it would be these two. And you know, these two are big enough to justify that kind of market cap. So they're high growth. They're extraordinarily large, which is actually a negative in some ways. You know, you know the drill. We prefer smaller companies, all else equal. But you know, their size and scope is not such a bad thing in an era in which, you know, tech creates sort of natural monopolies. These guys are case in point, the same way that Google, Facebook, Amazon, et cetera, they're not quite monopolies, but they kind of are, right? And natural monopolies. That they've not won their monopoly by, you know, government fiat or special treatment. They've earned it because they became the de facto platform in what they do. So all of that makes them very, very attractive. Now, you know, what are the downsides here? Neither are particularly cheap at the moment. They're both relatively expensive stocks based on earnings, sales, et cetera. But that's true of tech companies here as well. Tech in general is expensive because investors are paying up for growth. They also, you know, the volatility has been a bit high lately. Volatility is not always bad. No one minds volatility when stocks are going straight up, but volatility on the downside is not fun. And so, you know, these are expensive stocks that have had some pretty significant downside volatility of late.
You know, one thing that, you know, that stands out for me here is that just recently, there's been kind of a common view that perhaps the crackdown the Chinese government has had on these companies, on not just Tencent and Alibaba, but on others within their field, was overreaching, was a bit too harsh. And it has actually started to push the stock, both these stocks, up higher in pre-market and then into market trading to start off the week, which you know, tells me that, first off, you and I were talking about this offline, and that is the Chinese government really never goes back and says what they did was wrong. But here we have kind of
Tiananmen Square never happened. Remember?
Yeah, but here we have conventional wisdom that suggests that, you know, maybe that is the case. Both these, I'm looking at stock charts for both Tencent and for Alibaba here in the U.S. And again, another thing to be clear here is that neither of these companies are going to make massive inroads in the United States. Neither of these companies are going to gain footholds in their respective industries here in the U.S. Where their power lies is abroad. Where their power lies is not just servicing the largest retail population in the world, being China, but also all the other countries within the Pacific sphere, you know, Eastern Europe, you know, Western
China's
Asia,
regional trading partners.
Exactly. That is where you're going to see companies like Tencent and Alibaba really flex their growth potential. It's not going to be in North America. I wouldn't even say it's going to be in Western Europe. It is going to be in the East, in China,
given
and in
the
Asia.
kind of the state of relations between the West and China, there's absolutely no possibility of Chinese tech companies getting a major presence in the West. There's just too much mistrust right now. So that's if you're looking for growth there, you're not going to see it. But growth within China itself and in China's other trading partners outside of the West, yeah, the growth is essentially unlimited at this point.
And you have to understand that geopolitically, you've got, you know, about 3 different spheres of influence here. You've got the U.S. sphere of influence, you've got the Chinese sphere of influence, and you have kind of the Russian sphere of influence. And right now, you know, the Russian sphere has contracted since the fall of the Berlin Wall. It has gotten a little larger, but China and the U.S. have a huge share of this geopolitical these geopolitical partners that they work with. And there are some outliers out there that the U.S. and China and Russia are scrambling to work with. And you've got a lot of them that are in Africa, and then you have a lot of them that are in Asia, where China has
South America as well.
That.
South
America, exactly. So you have a very large percentage of the world population that both of these companies, both Tencent and Alibaba, can market and go after. Their growth potential is not just limited to inside the borders of China. It is in fact much larger than that. So, in looking at all that and seeing how both these stocks are trading at right around their 50-day moving average, they are slightly below their 10-day moving average. But like you said, these stocks have just been hammered over the last, probably even during the year, probably since February. These stocks have just been hammered. But they are showing a nice uptrend.
One point I would make on that is both of these stocks are trading at levels first seen in late 2017, early 2018. So the big surge in tech that happened last year and even 2019, it got erased. Like this sell-off that we saw in this year, it erased 3 years worth of gains.
And the other thing to point out is that both of these companies, while they are big tech companies, they are not necessarily subject to this congressional war on big tech that we're seeing here in the United States, because both these companies are in China. They have to deal with the Chinese government. We've already seen what the Chinese government will do, and now they may be paring back those regulations. We have yet to see what Congress is going to do with big tech.
And what was the point of the Chinese government's crackdown? It's pretty obvious to me what this was. China's government was uncomfortable with the fact that these two tech giants had become quite as big and quite as powerful as they were. What we saw was the Chinese government doing what it does, which is reasserting its authority, making it very clear, hey, we're the boss here. And now that they've made their point and the companies get it, they acknowledge, okay, you guys are the boss. Now the government can back off. Like they made their point, they accomplished what they wanted to accomplish. Now they can get back to making money.
And I think this all really started when you have the CEOs of these large companies like Jack Ma with Alibaba, who actually comes out and is not afraid to speak publicly about the Chinese government, about regulations and things like that. And this is something that the government in Beijing
he is
really
now
care for.
Yeah.
And so, then they say, okay, well, you've gotten a little bit too big for your britches, as my grandfather used to say. So now it's time for us to put you back in your place. That's now done. The dust has started to settle a bit, and now we're seeing both these companies start to build back momentum, the momentum they had before before the coronavirus pandemic and kind of pre-COVID-19. So I guess finally, let's touch on this. Out of these two, give me a recommendation. Which one is your one that you'd want to buy if you had these two to pick from?
I think both are great long-term holdings, but if I was going to choose one, I would go with Tencent. And it really comes down to one particular app. Tencent's diversified. They have a gajillion businesses that all roll up into the holding company, but their WeChat app is really like that. That's it. Like that pretty much is the Chinese economy at this point. What is WeChat? People think it's essentially like Apple's iMessage or Facebook's WhatsApp, or essentially it's a messaging app, right? No, it is a messaging app, but it's also a payment system. It's also how you book a reservation at a restaurant. It's how you buy movie tickets. Your entire life, every transaction you make is essentially done by WeChat. You book the restaurant, you book your table, you pay for it, you tip the waiter, everything is done on the app. And it's funny, as a random aside, I have a friend who recently traveled to China, and he shows up and, he changes money into the local currency, and he has his credit card and he has his cash, and he's thinking, okay, I'm ready to do my thing in China here. Nobody would accept cash. Like they don't know, like the merchants don't know what to do with it. Like they don't want cash. They have no way to process it. So he's like, okay, no problem. Here's my Visa. Well, they didn't know what to do with that either. Like we don't really take credit cards anymore. And so he's like, well, how do I buy lunch? And he had to use WeChat, and he didn't have an account, and he didn't have any way to get money into the account. So this guy is a millionaire who actually had to go essentially beg for his lunch because he had no way to pay, because everything is on WeChat, and he didn't know that ahead of time and didn't know how to plan accordingly. So WeChat is so instrumental to daily life in China. They have just become the indispensable app. So just that alone, in my opinion, makes Tencent, if you're only going to pick one, that's the one I would pick.
I agree with you to the point where, both these companies have a lot of great potential, and I think they're very good, holding positions to have. in your portfolio. If I had to choose one, I'm going to go opposite. I'm going to go with Alibaba. And the reason why is because while WeChat, yes, it does have a kind of a center of the market when it comes to commerce, trading, and currency. Alibaba and its platform, which is very similar to Amazon Plus, has the potential to expand far beyond China. They've talked about expansion into India, which is a massive, massive market. I think they've even talked about going into Africa, which is another huge market for e-commerce that has been relatively untapped. And I think once they do that, and I think they will, I think you're going to see massive growth for a company like Alibaba. Again, I agree with you that both these companies have a lot of great potential. They are good buy and hold stocks to have, even with recent headwinds revolving around the Chinese government. But I think Alibaba and its very simplistic Amazon-like platform has got massive growth potential, not just in Asia, but in Africa, and I think even to an extent, South America, because these are areas where these types of platforms don't exist on the scale of an Amazon or an Alibaba. But once
there's not entrenched competition yet.
These are untapped markets that Alibaba can really take over with a lot of ease.
In South America, they'd have to fight with Mercado Libre is a worthy competitor. But
true,
yeah, I mean, Africa.
I think the resources that Alibaba has, I think Mercado Libre is a great company and does a lot of great things in South America. But I don't think they have the financial resources that an Alibaba has.
They absolutely do not.
Just in that scale. But again, India, which has, I believe, the third largest population in the world, second largest population in the world.
India Africa may have actually overtaken China at this point. Like China and India are neck and neck in population. If you look at, I think 1.4 billion each. Yeah, like sub-Saharan Africa, I want to say is close to 1 billion people, or roughly 1 billion people.
This is a massive market that Alibaba has the ability to go in relatively easily. Now, if Tencent were to do the same thing with their WeChat or things like that, I think their conversion would be a lot more difficult because of how many moving parts they have.
Not necessarily, because if you think about it, fintech has really taken off in markets where the traditional banking system is rickety and almost non-existent. If you look at, I spend a lot of time in Peru. Something like I do. Something like half the country doesn't have a bank account, and it's because the banks don't know how to assess the risk, and they won't open an account for them, or the people are relatively unsophisticated. They don't trust the banks, and who can blame them? The country has a long history of financial instability. Well, that's where fintech comes in. You see people that are, very humble, never had a bank account in their life, who are swapping money back and forth on their phones because it's easy and they can. They're not using like PayPal or Venmo like we would here, but they're using other, essentially copycat apps that do the same thing. That's it. And so something like WeChat would really do well in that environment. Now, at this point, they're no longer the first mover in those markets, so they would have to compete with existing competitors. But it comes back to what we said earlier about Alibaba, who has the financial resources of a Tencent, or very, very, very few companies in the world with exactly. So I would argue that, well, you know what, at the end of the day, the beauty of the stock market is you actually don't have to choose which one of these to buy. You can just buy both. You can just buy a few shares of both and buy them and hold them forever.
Yeah, exactly. So that's kind of our take on Alibaba and Tencent. Again, both very good companies to buy and hold. If you want to buy both, I don't think you get an argument from either one of us. If you had to pick one, Charles leans more towards Tencent. I lean more towards Alibaba. Just kind of depends on what your portfolio looks like, kind of what your goal for your portfolio is. And all those types of things to decide which one of those would better suit what you want to invest in. So Charles, appreciate the time. Thanks a lot so much for doing it. We look forward to getting back on track and doing it more. I promise I won't take any more time off so that I am here to help you and do these videos with you. I won't take any more time off. I'll let you contend with my wife on that, but that'll be where we go from here.
Very good.
Awesome. So Charles, we'll do it again next week. Again, look forward to doing it. Make sure you are checking out moneymarkets.com each and every day. Charles, myself, Chief Investment Strategist Adam O'Dell, we do provide you the safest, smartest, and most sound investment information that we possibly can. It is up there 7 days a week. Encourage you to check that out. Also, if you're not subscribed to our YouTube channel, do that. Just hit the subscribe button, mash that notification bell, get notified each and every time we put out a new video. If you have a question that you'd like to ask Charles, myself, or Adam, you can do that very simply. You can either comment down below here on YouTube, or you can email us at feedback@moneyandmarkets.com, and we would love to see your feedback, love to see what questions you ask, and we'd love to answer those whenever we get the opportunity. So make sure you do that. So for Charles Sizemore, I am Matt Clark, research analyst for Money and Markets. Till next time, everyone, safe trading.